insurers in general and the system in general was not prepared for this level of fire. In California, a lot of insurers have been dropping homeowners or refusing to renew homeowners policies, especially in areas with a lot of wildfire risk. The California FAIR Plan is basically the insurer of last resort in the state. This isn't as good as regular insurance. It's not going to cover as much if your house burned down, but it is a way to get insurance if you can't get it anywhere else. And they do pay out up to $3 million for a home. It doesn't have nearly enough to handle even one or two big fires in the areas that it has a lot of plans in. If they run out of money, everybody who has insurance in the state of California is on the hook. So first they go to the reinsurance market, which is basically insurance for insurers. And after that, for the first $1 billion of claims, insurers in California have to pay them. But then after that, it goes to any policyholder in the state of California, and they basically divide it up among all those people. This isn't just happening in Los Angeles. Across the country, in New Orleans and Florida, even in places like Iowa, insurers are dropping policies or refusing to insure people because the risk of really dramatic weather events is increasing. And so you have people all across the country who either don't have insurance or are turning to insurers of last resort because they can't get insurance anywhere else. And you have these FAIR plans or something like them in 33 other states across the country where people are having trouble getting insurance through other means. So you've seen a lot of homeowners have to resort to these FAIR plans. It's essentially doubled from 2018 to today, and there are about 2.7 million policyholders in FAIR plans across the country. There are a few proposals for what we could do to the insurance system. One is to basically have a federal backstop so that if the FAIR plans run out of money, the federal government could help pay out. The other is for the federal government to be a reinsurer. So essentially to be an insurer for the FAIR plans. That could save the FAIR plans a little bit of money because they wouldn't have to buy insurance on the private market. You don't want to get rid of insurance because insurance is one way that you can really direct people or guide people where to live. If insurance is really, really expensive in one area, that probably means it's not a great area to live in because there's a high risk of something happening to your home. I don't think anything's going to change, unfortunately. Florida and Louisiana are actually ahead of California in this and running out of money for insurers and in properties being uninsurable. And nothing's really changed. You still have building in high risk areas in Florida and Louisiana. In California, especially, you have a lack of affordable housing. So there's this really push to build housing anywhere you can. You could maybe have people building in areas that have a high wildfire risk, but you need them to build because you need more housing. So those two things kind of go against each other. We're really going towards this uninsurable future, and people still need insurance, but the risk of climate disasters is getting higher and higher. It's an open question who's going to pay for that insurance.